know what? People aren't able to buy a house because this guy is a numbskull. He keeps the rates too high.
If the Fed would just cut rates by 1%, we would literally save $365 billion annually in interest payments alone. And 2%? Well, that's over $600 billion in savings. But Powell's not budging. He says the data doesn't support a cut yet.
This is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
So now we've got a standoff, a president calling out the Fed chair by name in front of millions of Americans, while the Fed insists that it's staying neutral and data-driven. But here's the thing. This fight is not just about politics. It's about your mortgage, your rent, your job, your ability to build wealth in this economy. Because whether you love Trump or you can't stand him, the truth is this. He's not wrong about how much high interest rates are hurting the average American. Just ask anyone trying to buy a house right now. So what's really going on? Is Powell dragging his feet? Is Trump oversimplifying? And why haven't rates come down yet? Even with inflation cooling off? Let's break it down right now.
One shot, now the future is yours. Go!
Just a few days ago, Trump's press secretary held up a giant chart of global interest rates, and what'd they say? The one problem that remains is high interest rates for the American people.
But unfortunately, we have interest rates that are still too high. So the president sent this note to the Fed chair today. And if you look at this chart, this is a chart of all of the interest rates of many countries throughout the world. At the top is Switzerland. They're only paying a quarter for interest rates. Cambodia, Japan, Denmark, Thailand, Botswana, Barbados, Taiwan, Bulgaria, Cuba, Sweden, Morocco, Cabo Verde, South Korea, Algeria, Canada, Albania, Libya, Malaysia, China, New Zealand, Trinidad and Tobago, Czechia, Bolivia, Australia, Costa Rica, the Bahamas, Kuwait, Papua New Guinea, Bosnia, United Kingdom, and the UAE are all paying lower interest rates than the United States of America, which has one of the hottest and strongest economies in the world. The president sent this note to the Fed chair. It says, Jerome, you are as usual too late. You have cost the USA a fortune and continue to do so. You should lower the rate by a lot. Hundreds of billions of dollars are being lost, and there is no inflation.
She's not wrong. Switzerland, Japan, Canada, even Botswana all have lower interest rates than the United States right now. But why is his press secretary going for the jugular? Because last week the Fed met and they decided again to keep interest rates exactly where they are. That's the 7th time in a row that they've hit pause. No cuts, no relief, just holding the line. And I'm gonna tell you, if you're new to my channel, my name is Kris Krohn. I've done over $2 billion worth of real estate investing, and I know how to make money with higher interest rates, but all of my investors that are betting on their financial future, doing an alternative to 401ks and IRAs, looking to build a portfolio, these high rates, it has them nervous. I can convince only so many of them that this makes sense over my 20-year track record, but there's still many that are holding out that are basically saying we need the rates to come down if we're really gonna play this game because our cash flow is being squeezed. Literally, if I buy a house or rent it out, I'm getting a smaller cash flow, and if rates come down, it's a bigger cash flow. And even though cash flow is only a small part of the real profits that we make in the game, it's enough to make investors shy. Now, what Trump is doing is he's throwing his weight around as president and he's forcing change. But Jerome Powell, he's not backing down. These are the 2 people with the most power over your financial future. So what happens when they don't see eye to eye? Who wins? Who's right? And more importantly, who's actually in charge? Well, that's exactly what we're breaking down today. But first, tap that like button, hit subscribe, and share this with someone else that wants to be up to date, in the know on the economy of 2025 and how to use this information to better your financial situation. Let's get into this. I'm going to call this part 1. What Trump is really saying about the need for these cuts. Trump is not being subtle. He's straight up saying that interest rates are way too high and it's hurting the economy. And according to him, every time Jerome Powell keeps rates up by just 1%, that it actually costs the country $365 billion a year. That's $1 billion a day. That's money that we're spending just on interest. Money that could actually go towards building roads, paying teachers, or reducing our debt. Or just making life easier for the average American. Like, understand that a mortgage is your biggest expense. It's your number 1 expense. If we can reduce those rates, guess what? Then we're gonna get that cost of living back into greater alignment. Whereas right now, we have such an unhealthy America. We have 70% of Americans that are living check to check. That number is higher historically than it's ever been, and it's because our dollar literally just doesn't go as fast as it used to. And on top of that, Trump's saying, well, what if we actually cut points by 2? And ultimately, I know he wants 3. Well, Trump says that if we cut them by 2, that's $600 billion a year. 3 points, now we're starting to get in alignment with $1 trillion. Guys, that's huge in the economy. And here's what I think is happening. I think Trump is going after the obvious money that's never been obvious to politicians before. When he basically said, let's go after these tariffs, we're going to stimulate hundreds of billions of dollars over my term. We're talking trillions of dollars now. Well, he's seeing the exact same thing with interest rates. And here's his main point. Inflation. It's down. It's hovering right around 2%. Gas prices are lower. The economy is doing well. So why are we still paying sky-high interest rates? Why aren't we making life easier for Americans? He says that it's stopping people from buying homes, refinancing their mortgages, and growing their businesses. And he's putting the blame squarely on Jerome Powell. His exact words?
We should be at 1%. We should be leading the world. Instead, we're paying 4%. And if you look at what that means, that's over $1 trillion in interest that we have to pay. That with the striking of a pen, we would be saving more than $1 trillion.
And here's the thing, Trump's not just ranting. The numbers check out. Right now, the U.S. is spending over $1 trillion a year just to pay interest on our national debt. That's more than we spend on the military, and those numbers keep going up the longer rates stay high. This is one of the things that I think Trump does really well. I think we, as the American people, hear the news, we learn about the economy, and we think this is going right over my head. It's too complicated. But in Trump's eyes, this isn't complicated at all. Inflation is under control. The economy is strong, and the Fed should have already cut those rates. So every day they wait, it's literally costing regular Americans, and the whole country is basically losing big time. Hey, sorry to interrupt, but this can't wait. What I'm about to share could literally be the missing piece that you've been looking for. When I started investing in real estate, I made one decision. I was going to study every strategy that was out there, buy and hold, fix and flip, short-term rentals. I was going to look at everything, but I wanted to basically compare them and find the best strategy. And I found it. I call it the straight path to real estate wealth. And guess what? It literally outperformed everything with the highest ROI, the least amount of effort, and the smallest startup cost at all. And that's basically why I wrote this book, The Straight Path to Real Estate Wealth. Believe me, there's millions of strategies out there, but only one that gets you there faster, cleaner, and with your sanity intact. This brings me to part 2 of the video. What is Jerome Powell actually saying? Jerome Powell is the chair of the Federal Reserve, and that's basically the head of America's central bank. That institution sets interest rates, controls the money supply, and tries to keep the economy stable. His main job is to basically balance 2 different things. Keep inflation low and make sure that people have jobs. And that basically means raising rates when the economy overheats and then cutting them when things slow down. Now here's what most people don't know. This isn't a political position. The Fed chair is supposed to be independent, basically immune from election year pressure. This individual is picked by the president, but confirmed by the Senate. And they're basically in for 4 years while the president is. But, and this is key, they can't just be fired by a president who doesn't like their decisions. And I think that's kind of the situation that Trump is in, is he's applying a lot of pressure because, ironically, Jerome Powell was first appointed by President Trump in 2018 and then reappointed by President Biden in 2022. And that means that unless he resigns or is removed for cause, his current term runs basically through May 15th of 2026. Now, there have been some reports that Trump was trying to find cause to fire Jerome Powell, and that's what might have led to a surprise visit to the Fed's headquarters. The Fed is currently going through a massive renovation with a price tag somewhere around $2.5 to $3 billion. And Trump, basically being a real estate guy, showed up in person. He called the project overpriced and basically said, if this were my company, I'd fire the guy in charge. He was clearly taking a shot at Powell, even though he didn't say it directly. Now, Powell says that Trump's numbers are off and that it includes other buildings, but apparently Trump didn't find enough cause to fire Powell because he hasn't. He hasn't made that move yet, and he's talked about basically just waiting for Powell to finish out his term next May. Powell's basically saying that inflation is coming down, but it's still above that 2% target. He called the current rate modestly restrictive, meaning it's tight enough to slow things down a bit without totally freezing the economy.
When we paused, inflation was above target and the labor market was pretty good. So that was a time when policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? It'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in before the next meeting. Will it be dispositive of that? It's really hard to say. We don't make those decisions right now, so we'll have to see.
He also said that they need to see more data before making a move. So between now and the next meeting in September, they've got 2 more rounds of jobs and inflation reports. And until then, they're basically not committing to do anything. For me, hyper frustrating because frankly, I've actually been waiting for rates to get lowered for the last couple of years. I mean, under the previous administration, the economy wasn't doing well. And it's like, why aren't you lowering the rates? And they did a little bit, but when Trump said, we're gonna drop them 3%, I'm like, that's exactly what we need. And there's a lot of Americans that are basically waiting on the bench. And for them, the economy is kind of frozen because they're not willing to make a house move or a refinance move. Which brings us to the third and final part of this video, how current rates are impacting real estate investors, which is basically my arena. Having done $2 billion worth of investing, this is something I can speak to. Let's talk about what all this actually means then for basically you if you're watching as a real estate investor. Because this isn't just some political back and forth. The current interest rate environment is making it super hard to get into a home and is basically pricing a bunch of people out of homes that would have made total sense a couple of years ago. Let me just show you some examples. Let's take a look at the median home price in America right now. It's hovering right around $435,000. At a 3% interest rate that we saw not too long ago, your monthly payment would be $1,834. And over the life of the loan, you'd pay $660,000 for the house. It's a lot more reasonable than what we've got going on right now. You're also going to build more equity, and the bank's going to make some money, but they're not bleeding you dry. Now let's take a look at that same median $435,000 home at today's rate of 6.72%. Your monthly payment jumps all the way up to $2,813, and your 30-year comes out to a whopping $1,012,584. You're literally paying $400,000 more for the house over the 30-year life of the loan. So let's pretend that you went ultra frugal and you tried to buy a more affordable house. Well, now you're going to buy something below the median, just like I teach, and here's how that breaks down at 6.72% interest rate on, let's call it, a $320,000 home. Now you've got your monthly payment just over $2,000 a month, and over 30 years, it's going to be $744,000. That's double the price of the home, but that's what's happening with today's interest rates. So yeah, when you buy smart and you go low on price, the interest rates are still going to eat into your returns, and here's the kicker. The cheaper the home you get at that 6.72%, it ends up costing you more long-term than a more expensive home would have at 3%. This is why high interest rates can be such a deal killer, and it leaves many Americans just sitting on the fence waiting for something better to come along. They don't just affect affordability, they change how wealth is actually built. Now, I just want to be really clear. The US Constitution and the IRS tax code favors Americans investing in real estate because now you're part of infrastructure. Like when I buy a home, there's a reason why I get to write off the interest, I get to depreciate the asset, and what it's going to do is it's going to lower my income even though it's actually raising my income. But I can't help the government with that infrastructure as an investor if they're going to keep the interest rate so high. Am I actually really hoping that they'll do it in September? I'm going to be praying for it. But in the meantime, should you stop? Should you stop investing in real estate? No. It just means that you have to know your numbers better. You have to be in smarter areas. You have to buy the right kind of real estate. And then when rates come down, you're probably going to do what I'm going to do, which is refinance a lot of my properties, even sell some of them and trade it for others. Here's the reality. When I invest in the game of real estate, I know how to make money with higher interest rates and lower interest rates, and you should know how to do that too. You're always welcome to click any of the links below because I've got all sorts of tools and knowledge and information showing you where I'm finding houses, the price points that I'm buying at, so that even with today's interest rates, you can see why I'm still doubling my money or more every 5 years. It's actually a lot smarter for me than a 401k, the IRA, or the stock market. Now, at the end of the day, the Fed chair, they get to make the final call. And it's looking like Trump is stuck waiting until Jerome Powell's term is up next year. So until then, no amount of tweets, press conferences, bullying, or billion-dollar renovation visits are going to force the Fed's hand. Powell's made it very clear. He's waiting on the data. And President Trump does not have the power, unless he does something wrong, to get him out of office, which might mean we've got another year of higher interest rates. But I'll tell you this, Trump would like to make good on that promise. He's going to have to put a different Fed chair in that is going to agree to lower those interest rates. So we got to hang in for right now. And then the question is, next year or the year after, do we actually get the benefit from massive rate drops? Here's my bottom line on today's video. If you're thinking that Trump's going to basically force Jerome Powell's hand to lower those interest rates, we could be waiting for a long year. Or who knows, maybe there's some backroom deals that go down and those rates start creeping down a little bit. But I think for me, in my investor category, for my investors, I think we're going to be waiting to the latter half of 2026 before we can expect those interest rates to start coming into alignment.